Check. 1, 2, 3. Give me a sec. I'm just checking if all the audio and video is fine. Wonderful. I think it's a bit too loud also. Okay, wonderful. Hey guys, what's up? Can you guys hear me clearly? Yeah, wonderful. All of you guys can hear me. We'll just wait for a few more seconds for people to join, and then let's quickly begin today's session. It won't be a very long session. It'll be quite a good, decent, soft session that we will have. But I hope you guys are excited. I hope you guys are ready for it. Let's just wait for a few more minutes for people to join, and then we'll quickly start the entire session. Yeah, how are you guys doing? How is everyone doing today? Good, bad, decent, could be better kind of a situation. Yeah. Good afternoon, Dipankar. How are you? Awesome. Let's look at the market today first. So I think we can start, right? I think people are here. So I think it's already been a minute. So let's quickly begin. Hi, Rajendra. How are you? Beautiful. Okay, let's begin. Let's go ahead. So coming to Nifty, now if you look at the chart of Nifty, right, obviously it doesn't look very attractive, mainly because it has fallen quite a bit from the moving averages. Yeah, let me add the 200-day moving average. Let me add the moving average here as well. 1 second. This is the 9-day. I'll convert it to 200. Okay, now we have the 200-day moving average, which is around 25,000 on the simple moving average. I think on the EMI side, it's somewhere around 24,800, but on the simple moving average, it's around 25,000. Now, if you look at the market has definitely taken a massive beating. Multiple reasons. Mainly, it was because of the war and the rise of oil prices and rupee depreciation, all three hitting at the same time. Luckily, now that is not the case. And finally, we are doing a small recovery. One bad thing is this nice big gap has come in the middle again. Okay, so this nice hollow gap, as you can see here, has come in the middle. Now, it's not necessary that every time the gap needs to be filled right now. But there is a possibility that maybe in the future, we might see the gap filling happen again. Now, let's assume that you go up and we reach 28,000 and then some bad news comes and it comes to gap fill at 23 and then starts going back up. That possibility now comes into the picture. Hopefully, I mean, if we're lucky, it'll fill the gap right now. It's just a small gap and then starts going up. Usually gap filling always doesn't happen, but sometimes gap filling happens. And if that happens in the future, we might be in a problem, because I think even this, what we filled today was a gap of this, right? We came and filled a gap here in the past as well. As you can see here, this was a gap that we missed during the Indo-Pak war. There was a gap, and obviously we'll be like, okay, this gap filling didn't happen, so we're okay. Market went up and then eventually came back and filled this entire gap up here. Now it's made the same area, it's made another gap here. So that has become a problem. So this gap, I don't know when it'll get filled, either now, tomorrow, later, we don't know. Hopefully it doesn't come back to the same gap, right? So now just from the candles, what we're seeing right now, this looks nice. Okay, this looks nice because we had the day high, we had the profit booking, and now we have the candle closing above the high of the profit booking as well. This mainly indicates that it indicates a bullish signal. Now, obviously, we don't know what will happen tomorrow, but definitely this is a bullish signal that is being depicted here. We might see it come back to all-time high, which is around 26,300, from where we had the massive fall. It won't break it immediately. The way I see it, it should go back up slowly. It'll face one resistance at 200-day moving average over here, and then it'll face another resistance over here, and then we will witness an all-time high breakout, which, if we're lucky, might happen this year itself. Okay, so if we're lucky, it'll happen this year. If we're unlucky, it might not happen this year. Then it's absolutely fine. I mean, we'll have to just wait and see when it gets filled. But right now, this looks like the situation. But finally, I would like to say that we are out of that stupid zone. That so much negativity was there in the last few months. Obviously, the guys who accumulated right now are very lucky. And for the people who have not accumulated, for some reason, you are waiting for the fall, or you are waiting for a bigger fall, I think you can start accumulating right now. I don't think you should, keep waiting more and more. Do your SIPs, do your index investing, whatever you're doing, do it. But don't get, don't get too excited in trying to find the bottom or find the top. I think this is a good time to take a bet into it, right? So don't waste too much time over there. But now, just when we thought that one part was getting over and finally the war is over, do you know we're entering another chaotic cycle right now? Do you know what cycle that is? One cycle got over. We are coming to another beautiful cycle, and that beautiful cycle, as you all know, is our beloved earnings cycle that has now started coming in. So we saw TCS's result coming in. We saw a few more companies' result coming in, and we'll go a little bit and look at those results as well. But the result season have basically started coming back into the picture. That means earning season, whenever it comes in, it's going to be extremely, extremely, extremely volatile, right? That is the only sad thing that I look at when we talk about it. It's going to be extremely volatile, which is not a good idea, right? Now, let me show you. For example, we saw TCS's result coming in over here. TCS's result, I mean, a lot of people thought that TCS would be bad. Somehow the result has come in well. And they've said that the AI revenue has now started doing well. Now, there is no such thing as AI revenue. I think they're just doing a little bit of fluff. Basically, they're saying that AI service revenue has now come and done well. Basically, they used to do the same services before. Now they're doing services in AI, which is just like adopting to a new stack, and they're calling it AI-based revenue, which is kind of cheating. But I think people understand it in the market. That's why they're not too excited. That's why TCS is trading at 17 PE, right? But the result came out, quite well. I think. Again, the result didn't come out very well. The result came out well only because they sustained their existing client. And second, the rupee depreciation also was quite aggressive from the last quarter to this quarter, right? Actually, let's check that also, right? Because see, we are analysts. We should not get overexcited. We're back to 93. Wow. Okay. Quite sad. What happened in the last 3 months? Okay, from let's say Jan 1st to now. I think Jan 1st to March 30th, we had a 4% depreciation in 4% we lost, right? From ISD, UNR ISD. So I think that is what it is. I think if you look at it, that is basically what is there. So 4% came. That means the organic growth would be around 5-6%. So it is not very interesting in that perspective, right? So very sad. So I don't think we're still out of the weeds, but at least it's not going down. Okay, so a lot of people who are very worried that it'll go down, it's not going down. It might not go up, but it's not going down. Krishna Foskam came out with a crazy result. But one result I really like, I want to talk about is Anand Rathi. Now, this is very interesting. I'll just open the investor presentation and show you, right? Because I like Anand Rathi. And recently, I don't know if you guys saw the interview. I interviewed this guy, Feroz Aziz. Great guy. I mean, I met him. I think our interview is there on YouTube. Lot of information that he shared on the YouTube. And very nice, because I also wanted to understand what is going on in this space. And obviously, Anand Rathi is defying logic. Defying logic means all the companies in the competition of Anand Rathi is not doing good. Only he's doing good. Only they are doing good. How is that possible? So that is what I wanted to try and understand. But let me go a little bit too deeper and show you what I like about their company. 1 second. Let me zoom out. Yeah, consolidated highlights. So if you see the consolidated highlights from FY25 to FY26, can you see that they have grown by almost 20% minimum, 22% year-on-year growth rate. Revenue has gone up by 22%. PAT has gone up by 28%, and the AUM has gone up by 20%, which is absolutely mind-blowing. Again, a big disclaimer before we do this: I do not hold any shares of Anand Rathi because I would love to, but I don't get the valuation comfort to invest at 70p. That is why I'm not bought it yet. But they keep giving crazy result and it's constantly going up. So I would love to wait for a dip whenever it happens. So just giving a disclaimer, because I'm an RA, I have to give certain disclaimers, right? So yeah, this has done really well. I mean, even in such a bad market, the results are speaking for itself. And I'll tell you why this is happening also. So we saw that the mutual fund SIPs have also decreased a little bit. Everything decreased, right? Net inflow, look at this. Equity net inflow was flat, 1%. So how are they increasing their revenue when mutual funds are not coming? And Anand Rathi is a very big distributor, by the way, wealth management distributor, right? So I'll tell you why that is happening. It is happening because of this slide number 10. This is exactly why they're making more money. You know why? Because they are slowly eating market share from the bigger players. That is why their revenue is coming out wonderful. They're slowly eating market share. In March 2019, they had 1% market share. Now they have 1.46% market share. And please note that the market share is also increasing. So it's not just that market share eating is one part, but the whole market share is also growing, which is another part. So two things are actually helping the growth, right? So the market itself is growing. As you can see, it went from 83,000 to 4,15, 4,17, and they went from 0.18 to 1.85, and now they're at 2.38. So not only is the industry growing, but they are also taking market share from the industry, and that is why it looks good. But yeah, valuation comfort is not very interesting. Now, another reason why I like Anand Rathi, again, not a recommendation, but why I like them is because they give guidance every time. Every year they give guidance, and every year they have outperformed the guidance. That's also because sometimes they give the guidance purposely low, and then they outperform that guidance. That is how they do. So last year they'd given a guidance of 1175 and they beat it to 1198. They'd given a profit after tax 375, they beat it to 386. They made 1 lakh AUM, they reached 93, so it was okay. Now they've given a 10%, 15% growth. 1,200 to 1,400 is the guidance for 27, 460 PAT and 1 lakh 20. By the way, as per the con call, they have already crossed 1 lakh over here. Right, they've already crossed 1 lakh apparently. So this is something we need to look at. So again, I don't want to go too deep into this, but this is something that is very interesting that I think all of you guys should definitely keep an eye out. Definitely the result seasons have come in, and we will obviously go deeper into all of these sectors. But yeah, right now, let me talk about what sectors are looking interesting as well, right? And where is value still there? Would you like to know where value is still there? Where are the companies that have low P ratio still now? Right, so the deep value as they call it. So one thing I have noticed, again, not a buy sell recommendation, one thing I have noticed is that private banks are looking very interesting. Okay, private banks are looking very interesting, mainly your ICICI Bank, your HDFC Bank. So look at ICICI Bank, it's actually gone down. If you look at the 3-year time frame, they've actually, from the peak, they've corrected, they've gone down 17%, now they're up back to 10%. But these are companies that will eventually figure it out. There is no big issue with private banks. There is no big fundamental flaw in private banks, right? Abhi thoda gira hua hai, which is fine, but there is no big massive issue that cannot be solved. So private banks are looking very interesting. This is something I really like. IT though definitely yes, Dipankar, IT is obviously looking good. HDFC Bank I would say is the lowest valued company today. I don't even know what is this. It's sitting at the lowest price to book. The biggest private company is sitting at two price to book in India today, right? So that is happening with private banks. Even your Axis, everyone's fallen. Look at Axis Bank. Okay, 1 year. Axis Bank actually did a very sharp recovery. This was a buy the dip. This was a beautiful buy the dip, 15% free dip that was. Now it's back up by around 13-14%. So private banks are doing wonderful, and they're still undervalued, and that is why they're doing well. PSUs on the other hand are already overvalued, reaching overvaluation zone. So if you are entering PSUs right now, you are in a problematic situation. You might be entering at the top. Apart from that, yes, Eicher Motors is again fell down quite a bit in this fall. I'm showing you all the ones that fell down that are fundamentally strong. So Eicher Motors again fell very nicely. It fell, as you can see, it fell 19%. And obviously these type of falls is where the advantage comes in, because these are very big companies that nothing's going to happen to these companies. So when they fall like this, you have to take an advantage. Obviously it went back up another 12%. So easy 12% on this side as well. Coming to your Mahindra also, like I don't even know why Mahindra fell so much, but if you look at Mahindra and Mahindra, they also fell. Look at this. Mahindra and Mahindra fell 20%. 20% fall in Mahindra and Mahindra. Absolutely no reason why. Again, this will start taking a nice recovery. I have a small stake here, which is 24 shares. This is my son's portfolio, so this is there. But this also fell a lot, right? So this is very interesting. These companies you should start looking at. Whenever the fall comes, you should take an advantage of that. I usually have a screener to screen this. So if I actually go to screener, so I actually have a fundamental fall screener kind of a thing, right? Let me show you that. 1 second. Yeah, can you see this? Yeah, so I have like a fundamental fall screener. So every time the market falls and the stock falls by around 30% or more, I look at companies that have high ROE, high ROC, OPM. You can actually make it 12, but it's okay. EPS growth and sales growth, and basically approximately around 100 companies come in this list. And if you see the companies here, you will see that all of these companies have fallen quite a bit. So you can take any company and you can see if they've fallen or not. This will give a very good understanding of what has fallen. And there are some companies that are very good. So even if you just look at that large cap players, they will only give you a lot of information, right? Things that have fallen a lot. So this is basically what I try to find and I try to look at. If you want the screener, I can put in the link below. Not a problem at all, right? Oh, by the way, how many of you all are interested in the healthcare sector? Anyone here who wants to learn about the healthcare sector? Anyone? This is mainly healthcare sector. By healthcare sector, I mean hospitals, whether it's your Apollo hospitals, Max Healthcare, Aster DM. If you're interested in the hospital sector, we have not announced it yet. We're planning to announce it tomorrow to all the members. But since you guys are already live here, next weekend, which is Saturday, 18th April, we are basically doing a hospital sector mega trend webinar. Okay. I'll tell you why we're doing this webinar, because it's on 18th April, which is a weekend, Saturday at 7:30 p.m. next weekend, not now. So if you're interested, you can come. I think it's $499 with the coupon code is $399, but it's just to learn, right? So here we're going to talk about what is happening in the sector. We'll talk about the capex. So apparently 30,000 crores of capex is happening in this sector. 30,000 crores of capex means bed expansion is happening. So we're going to talk about the entire sector, how hospitals are actually run, how do they make money, what are the future drivers of this, and then we're also going to cover 4 companies: a small cap merger, demerger, special situation, a P-backed oncology turnaround, India's most capital efficient hospital chain, and one high margin niche play. So 4 companies and 2 more bonuses we will be covering. So if you guys are interested, I will put the link here. Yeah, 1 second, my bad. Don't use that link. 1 second. You can use the link that I've given you here. Arey yaar. Stupidity. Yeah, you can use the link and you can just use the coupon code LEARN, LEARN. I think if you do that, you can get that 100 rupees off also. But it's next weekend. So if you are interested, I would only want interested people to come. I don't want people who are not interested to come as well. So only if you're interested, please do join. It'll be a very good learning experience, mainly from a learning standpoint, right? Nothing else. So if you want, I've pinned the message. If not, we will be sharing it in all our communities. We will be sharing it in our YouTube community here. So we'll be sharing it in our YouTube community. We'll be sharing it on our small case community. Everywhere we will share it. But if you are there, you can come to learn. You want to learn, you can come and learn. It's like $300 and $400, and you can come and check it out. Link is not working. Oh my God. Okay, 1 second. Let me redo that link. Very interesting. 1 second. Let me check why it is not working. Share करना होगा तभी नहीं चलता है ना. That is the fun part. 1 second. Yeah, I'm singing Durandar's song. Okay, check if this is working. I'm not sure, and use the code LEARN. Check if this link is working. If this is also not working, then problem. Yeah, I've sent you one. I've sent the link on the comment section. See, you should just see something called register now. It's working. Okay, you can use the code. You can use the coupon code LEARN. Okay, you can use the coupon code LEARN, and I think then it should work. So maybe like this. I don't know. Check it out. But yeah, anyone who wants to learn can basically learn from this standpoint or this perspective. That will be good. So we'll be talking about a lot of stuff in the healthcare sector, and we are very excited about the healthcare sector, honestly. And we believe that it will do very, very, very well going forward. And we will be looking at some yes, it will be shared in 7 bar. It will be shared everywhere. Don't worry. We'll be sharing it everywhere on Instagram, YouTube. But since you guys are already here sitting on the live, I thought we'll just quickly share it, and I'll share it to you right now when you guys are here. Okay, now coming back to the session, we have another 5 minutes. We'll do a Q&A also today. I don't think I've done a Q&A in a long time. But see, basically when I'm talking about Nifty, I want to talk about valuations also, right? So a lot of people are asking about Nifty 50 valuations. So if you look at Nifty 50's P ratio, this is how it looks like from a max perspective. So Nifty 50 right now is sitting at a P ratio of 20.9. That means forward P, it is at 19. So Nifty 50 today is at a very good P ratio, right? Nifty 50 today has a very good P ratio. But if you talk about Nifty mid cap, okay, mid cap 150 is what people look at. Nifty mid cap is actually very overvalued even now. Very overvalued even now. So if you are investing in mid cap, be very careful. Nifty mid cap is not undervalued yet. And if you look at Nifty small cap, let's say 250 index, like the whole 250 universe, Nifty small cap is undervalued. So right now, the valuation comfort today is being seen in small cap a little bit, but Nifty large cap, which is Nifty 50, has the most valuation comfort that you can actually get. And that is why when we see a pullback rally, you will see that large cap and small cap will lead the rally. Mid cap will maybe go slower than faster. That is what will happen, right? So be very careful when you're investing right now. Because this is the data that is telling me, not me. The data is telling me that this is how it is. Now, will we go into a bull run and all? Look, we still have the problem of FII selling. We still have our rupee depreciation going on. where inflation is creeping up. So no, I don't think we will go into a bull run. So be a little careful about that. Okay. Okay, let's do one quick 5-minute Q&A very quickly. Any doubts, any questions you have, we can ask. I will do the thing and check it out. Okay, what do you... Go ahead. Good question here. Many people say that small case have a negative point. They don't tell the valid entry point for the stocks in the small case for new investors. What do you think? That's not true. Like, let's say, for example, you take a small case even today and you join it, you enter at the current point also. You have to stay invested for 3 years, bro. If you stay invested for 3 months or 1 month, obviously you will have that fluctuation. If you stay invested for 3 years or more, your entry point does not matter at all. Absolutely does not matter. Okay. Any good data center stocks in Nifty? See, if you ask me, I don't like data center stocks. I have seen this all across the world. Data center stocks don't do well because they're a high capex engine that is data center stocks. I like playing the proxy ones. I like playing power. So I like a couple of power companies that are there in the space. They are good. But data center stocks, I would not play because what I've seen in US, they're not doing very well. And in fact, data center now is getting cancelled and all of that in US. So I would be very scared about stuff, right? Okay. Just joined your 7-bar framework. How should I get access to 7-bar monitor? Just send me an email, man. support@shashankudupa.co.in. On Monday, I'll give you access to the thing. I'll just tell my team to give you access. On Monday, you'll get access. Don't worry. Okay, what else? June month, Mahindra and Mahindra futures. Why do you want to play risky, aggressive game? What if something else happens? What if Trump opens his mouth? Always play cash in this market. In a bull market, you can play futures and options, no problem. In a bear market like this, do not play futures and options. It is very risky. You are assuming that everything is over and you're taking the best case scenario. When Trump is there, never take the best case scenario. Always take the worst case scenario, Nitin. Nix gaming. So I would not take a future right now. I would rather hold cash. I mean, you can buy cash. If you want to buy, you can buy something in cash. Don't get into the other one, right? Where to invest now if equity returns seem to remain muted? So, Souvik, good question. Always be multi-asset invested, right? For example, I'll tell you, I have a little bit of real estate, I have a little bit of gold, I have a little bit of Indian equity, and I have a little bit of US equity. So I'm making money across the board. Like this year, I have made money, even though nobody's made money. My Indian portfolio has not made money. My real estate portfolio has gone up quite a bit. My US portfolio has gone up around 15-20%. So I'm very happy on that perspective. So always have a mixed approach. Don't depend on one market. You will become a big problem. Jinesh from the community member says, what about International Gemological Society, IGL? So actually what happened is they changed off their tune. So IGL was doing very well and then suddenly they changed their tune. IGL is now saying that they believe that natural diamonds will do better than LGD. So the whole premium that they had was only because of LGD. And now they're saying that LGD will not happen. I mean, they prefer natural diamonds and not LGD, which is very contra understanding, right? So that is what it is. Yeah. What else? One second. One second. Yeah, let's take more questions. Yeah, guys, whoever wants to be a part of the hospital webinar can use that link. I don't think we have unlimited seats, so whoever wants to be a part of it can be a part of it. Use the coupon code LEARN. Like when you do here, you will get a coupon code when you register. Just use this coupon code called LEARN. You'll get 20% off, and you can come and enjoy there as well. Okay, I've pinned it in the YouTube. I hope it's visible on YouTube that I've pinned it. Have I not pinned it? No, I have not pinned it again. What? I've become so bad. I've not done these lives in so long that I've become very bad in managing these lives myself. I need a moderator, I feel now. A live moderator is what I need. Okay, now I've pinned it. Yeah, let's go check more comments from people. Will the war resume again? No idea, man. No idea. Absolutely no idea. I don't think any one of us can honestly predict whether will it go or not. Is NetWeb good? NetWeb is not bad, but NetWeb is not bad. Only problem I have is with the P ratio. How much of it is already baked in? I think it is sitting at 100 plus P ratio. So I think it is already baked in. Did you have a multi-asset small case? No, I don't have a multi-asset small case. I have mutual fund small case. That you can go check out. Oh, I'll show you how my small case is doing. You'll actually be very proud. I'm very proud of it. So I'll show you. My God, 1 second. So this is fluid Q. Okay, give me 1 sec. Again, I have to put my mobile number secretly. It's not like it's not. It's been leaked multiple times in the past, but still, I had to change my number only completely. Okay, I can't do this right now. Uh, Give me 1 second. Just hold. No, so I don't have a multi-asset small case, but let me just get my phone. I kept it for charge. Give me 1 sec. Yeah. Let's go. Let's go again. So yeah, so this is fluid Q. I think here we did a very good job. We took a cash call. Okay. So right now, as you can see, as a fund manager, we're doing quite okay. We are up 5.33% and the market is down -4%. So we are at an alpha of 9, almost 10% above index. Yay. Okay. As you know, it's very difficult to beat the index. So we're doing our small bit to do that. Apart from that, I think we have fundamental C. This also is doing better than the index. As you can see, we are -1.11 and this is -4.69. So we are again beating the index there. And then we have the mutual fund baskets. The Bharat is a long term. Mutual fund baskets are also very interesting. So this is, so someone who said multi-asset, this is almost like a multi-asset one only. This is quite good. It has fallen down a lot. Even this is beating the index. So overall, I think my path to fund management as of now is quite good. So I'm not too worried about it. So let's see. Again, too early to call. I think I'll take a 1 year call and see how I'm performing 1 year. Your views on ICICI AMC? Does the price support fundamentals? Good question. ICICI AMC. Let me check. This one, right? ICICI Prudential Asset Management. Oh, it looks chart-wise looks wonderful, man. I think it's an IPO-based breakout. Actually, it's a third breakout. This was the first IPO-based breakout, second IPO-based breakout, fall correction. It's actually looking good. Fundamentally, I'm not sure, but technically, it looks actually quite interesting, honestly. FMCG real estate, not a big fan. Indian Game Hub, not a big fan. Absolutely not a big fan. I mean, one of my friend in the real estate market has been telling me that be careful. The market is looking little soft, and a lot of problems are happening. So he's told me to be very careful about it. So I think I will be slightly careful about it right now. Yeah. Okay. What else? Is it a good time or level to enter Reliance? Not, I don't know, Harsh Patel, because market is not looking very good right now. The Reliance is actually not looking very good. We have it in one of our, we've given a buy rating in one of our memberships, but we are waiting for it. We're waiting for it. I'm not, obviously it's Reliance, so nothing bad is going to happen, but I don't think it's bad. Why have you stopped updating about Varun Beverages and Deepak Nitrite Polycarbonate Boom? I never said I don't like Varun Beverages. I to always say it's a 5 year pick, and I don't see why people only. So people are price investors. I am a fundamental investor. When I look at fundamentals of Varun Beverages, I have nothing to worry about, and I'm not worried about it at all. Right. So even though the price has corrected almost 20, 25, 30%, when I look at the yearly revenues, I am not someone who gets scared by all of this. It'll keep going. It's a long term play. 5 years down the line, I don't care. Right. It'll be better. So that is how I look at things, right? Okay. Thoughts on BLS? Which sector bull run currently? Which sector bull run currently? PSUs will continue a little bit. I can see pharma doing a turnaround. So pharma, I think, will do a good turnaround as well. That is something I would like. First of all, guys, I see that I have 49 likes on this stream when 400 people are watching. So please be sweet and nice and kind in life. To at least click on the like button. If you don't want to subscribe, don't subscribe. But at least like button to click karo ताकि थोड़ा respect आना चाहिए. In the world of AI, I'm coming live and sitting with you. So let's please keep at it, right? Thoughts on KPIT? I to still love KPIT, bro. I don't know why people don't like it. I think people have become so negative in life. I don't see anything wrong. See, because again, as I said, there are two types of investors: fundamental investors and price investors. Fundamental investors will like KPIT. Price investors will hate KPIT. Why? Because they've seen 40% drawdown, 60% drawdown, and they're very sad about it. And then I'll open the fundamentals. Then I look at the fundamentals like this. Then I'm like, wow, Okay, and then the P is also corrected to 27. The P was high. Obviously, the P was at 54 because we were at the peak of bull run and all of that. So the P ratio was high. But fundamentally, is it wrong? Answer is no. Fundamentally, is it performing? Answer is yes. Quarterly, is it stagnating? Answer is yes. But it is growing? Answer is yes. It is stagnating. It is growing slowly because companies grow in cycles. Some cycles are good, some cycles are bad. And KPIT was never a 1 year play. It was always a 5 year play. So there is nothing to worry about in a 5 year play. Yeah. Yes, same thing here as well. Same thing here. Whoever asked me this question, something Jain, KDJ Jain P8I. ITC hotels giving good results, still it's down. What are you? Are you a price investor or fundamental investor? Please answer that question. If you're a fundamental investor, you won't ask me this question. You'll be like, it's going up, but price is down. Very good. I should buy more. But if you're a swing trader, then you are correct. But then you should not be looking at good results. So I keep telling people this, that you're always saying you're a fundamental investor. Fine. The price goes down, you become a technical trader. See this, price is going down. Now you are telling me, Shashank, that ITC hotels price is going down, but the profit is going up. Now any logical banda will say that this is a steal deal, but you will get scared. Why? Because you are not a fundamental investor. So I have no problems with ITC hotel. See, because ITC hotel is going to be there even when I'm old. Even when I'm old, this ITC Gardenia in Bangalore is going to be there. ITC makes a lot of money. They have the best management. So there is no stress about it. So don't worry. Views on Yatharth Hotel. We are covering Yatharth Hotel in the hospital webinar. I have shared the link on the. I have shared the link in this pinned section in the YouTube chat box. You can go check it out. We will be covering Yatharth. Many companies were covering. You come there. We will do nice, fun stuff there. If not, I think in my members only section, Yatharth Hospital, I've already covered in the past. So don't worry about that. See, you are saying you are a fundamental investor. Then why you are worried about price falling down? You should be buying more. It is an asset based company. They have assets. They have prime assets sitting everywhere. ITC managed company. It's like saying Reliance is falling down, should we exit? I'm like, okay, I mean, do whatever you want, right? Chalo, let's take one last company and then we'll stop. My guess is you'll be covering Yatharth, Narayana Hrudayalaya. We are covering almost 6 companies, Dipankar, approximately 6 companies. So we'll be covering many companies. See, it's not about covering companies. It's not about the names of the companies. I hate such people. You know, there are some people, you know what they do? They come, they'll see the YouTube video and they'll put all the names in the comment section. The people who watch those names have no idea what I've discussed. I can literally come and say 6 names that are all bad and some guy will just put all the names below. I should actually do that experiment once. Just name 6 companies and all bad companies I should name. And the guy who never watches it will go see that 6 companies and buy it and lose money. And then he will be forced to watch the video because people don't watch the video. So the main thing is about learning as much as you can, right? Give us 5 stocks for next 2 months with 10 to 12% return. That's not me, bro. I don't do such games. I'm a long-term player. No. 5 months to, there is one casino in Goa you can go if you want. If you want to really lose money and take a risky bet, casinos are there. You can go there. Why 2 months? One day, 50% gain, 100% return or 100% loss. If you want to play, you can play that game. I don't do that, bro. I am not in that sector right now. Okay, let's take one last question before we call it. What else? One last question. Inox India is very nice. I think Shankar Nath had done a very beautiful video on Inox India. I really liked it. I like the company. I've still not done my own research. Just because Shankar Nath has done it and he's done a fabulous job on it. I have met him, I have spoken about Inox India, but I have not done my research. So I have not invested in it yet. And I have a list of stuff I want to buy, man. I mean, I have a buy list. I have to first complete that buy list. So if you see this, I can't show you the stocks, but like for example, I have a buy list over here. So until this buy list is, I have a current hold and I have a buy list. Until this buy list is not done, I cannot, I don't buy other stocks. The main reason why I do that until the buy list is not completed, I don't buy other stocks so that I can stay very focused. When is the next podcast coming? I think next week we're launching. I did one with Shankar Nath, very beautiful podcast again. I did one with a guy called Rohan, beautiful podcast. He's a PMS fund manager, 1,500 crores. And this year he's actually going to come in the top 5. And he had made returns of 35% this year. And I'm like, bro, how? Like, how did you make 35% this year? Even I can't imagine 35% this year. So he made 35% this year, which is actually honestly mind-blowing. So I've asked him that question. So that one more podcast is coming. So 2 podcasts are coming on that front. Awesome. Okay guys, chalo, I'm gonna cut off because now it's 35-40 minutes. If you guys are interested in the webinar of hospitals, I will put the link in the comment section below. You can join it, and it is going to happen on Saturday. It's just for learning. There is no upsell, as we always do our webinars without any upsell. We don't have any upsell. You just come, learn, and go home. That's it. Okay. Awesome. Thank you guys. Take care. I will see you soon. And if you're watching till now, click on the subscribe button if you're not a subscriber. If you are a subscriber, awesome, man. I love you guys. Chalo. Take care. See you. Bye bye.